The markets may be closed, but the business stories are just heating up. I'm Robert Tan. Catch up with us on Business Brief. Here are your must-know business news this afternoon. A group files plunder and graft charges against then Finance Secretary Ralph Recto and former PhilHealth President and CEO Emmanuel Ledesma Jr. over the transfer of PhilHealth funds. In line with this, Executive Secretary Recto says he will cooperate with the Ombudsman amid investigations into the PhilHealth fund complaints. The Department of Agriculture extends the sugar import ban until December 2026 to support local producers and stabilize the market. Airport authorities expect holiday traffic at NAIA to reach 2.55 million passengers, with Terminal 3 seeing the biggest boost. In global news, Japan is restarting the world's largest nuclear power plant, a controversial move in its post-Fukushima energy plan. And China's yuan is gaining traction globally, reflecting increased use in international trade and financial markets. PhilHealth's billions were meant for the public, but the Save the Philippines coalition says top officials tried sending them straight to the National Treasury. The complaint targets Executive Secretary Ralph Recto and former PhilHealth Chief Emmanuel Ledesma, accusing them of plunder, graft, technical malversation, and grave misconduct. It cites the Supreme Court's order to return 60 billion pesos to PhilHealth. Last year, the agency remitted that 60 billion pesos before the court blocked the transfer of another 29.9 billion pesos. Critics warn the case exposes a clash between official actions and legal safeguards for public funds. Executive Secretary Ralph Recto vows full cooperation, but not before the Supreme Court puts a brake on billions of PhilHealth funds. Recto says he acted in good faith and will let his lawyers handle the complaints while continuing government work. The Supreme Court has ordered 60 billion pesos returned to PhilHealth and permanently blocked the transfer of 29.9 billion pesos. The situation highlights a clash between urgent Treasury action and strict legal oversight, keeping PhilHealth funds under intense public scrutiny. The Justice Department has filed criminal charges against Bilyonaryo gaming boss Charlie Atong Ang, marking a major turn in the long-running missing Sabongeros case. Justice Department spokesperson Polo Martinez says Ang and others face charges of kidnapping with homicide and serious illegal detention stemming from the disappearance of several Sabong enthusiasts. The cases were filed before regional trial courts in Lipa City, Batangas, as well as Santa Cruz and San Pablo City in Laguna. Martinez says if the courts find probable cause based on the evidence and the prosecutor's resolution, an arrest warrant may be issued against Ang. The filing of charges marks a critical step toward accountability as authorities move to match official assurances with legal action in a case that has tested public trust and the rule of law. The Philippines is keeping its sugar bowl tightly under local control. Agriculture Secretary Francisco Chu Laurel Jr. says sugar imports are banned until December 2026, long after this year's crop ends, to protect Filipino farmers. The Department of Agriculture will tighten oversight of refinery operations, ensuring standard and premium sugar inventories are tracked accurately. Alongside the Sugar Regulatory Administration, the agency is finalizing rules for molasses imports to prevent market disruption. The strategy underscores a delicate balance, shielding local producers while keeping the sugar market stable and confident. The government may keep a coconut factory it once planned to sell, just as global demand for coconut products surges. Agriculture Secretary Francisco Chu Laurel Jr. says the Department of Agriculture is reviewing whether to hold on to United Coconut Chemicals Inc. or Cocochem amid rising European demand. He adds the agency wants to determine if continuing to run the factory still makes sense. Founded in 1981 by former President Marcos Sr. and Ambassador Eduardo Cojuangco Jr., Cocochem once dominated Southeast Asia in coconut chemicals and oleo fats, exporting worldwide. The government had planned to raise 2.82 billion pesos from 682 million shares to support coconut farmers, while the facility continues earning from leases, warehouse rentals, utilities, and a private jetty handling 35,000 deadweight ton vessels, making the sell or hold decision anything but straightforward. Manila hosts a seminar highlighting deepening ties between the Philippines and Vietnam with a focus on trade, investment, and innovation. Bea Santiago is on the line for more details. Go ahead, Bea.
Hi, Robert. Thank you. Yes, what was once just another regional gathering turned into a clear signal of deepening ties between the Philippines and Vietnam. Manila hosts a seminar today aimed at boosting trade, investment, and innovation, cementing Vietnam's role as the Philippines' first and so far the only strategic partner within ASEAN. Deputy Assistant Secretary Ana Marie Santos of the Department of Foreign Affairs notes that the two countries shared views and strong respect for international law, highlighting their alignment on regional issues. She even mentioned including the West Philippine Sea. Tourism stands to benefit, so Department of Tourism Officer in charge Alex Makatumo says arrivals from Vietnam could rise sharply by 2026 as bilateral ties strengthen. Meanwhile, Department of Trade and Industry Undersecretary Perry Rodulfo emphasizes the government's push to expand trade and investment partnership in the region. So this is Bea Santiago for BNC, Bilyonaryo News Channel.
Thank you so much, Bea Santiago. Local telecommunications firms have reportedly blocked access to Interactive Brokers, one of the world's largest online trading platforms, and Filipino investors are unhappy about it. To discuss the implications of the restriction, we're joined today by Dr. John Paulo Rivera. He's the director of the Philippine Institute for Development Studies. Good afternoon, Dr. Rivera, and welcome to Business Brief. Dr. Rivera? Okay, we'll get back to Dr. Rivera right after this break. Local telecommunications firms have reportedly blocked access to Interactive Brokers, one of the world's largest online trading platforms, and Filipino investors are unhappy about it. And to discuss the implications of this restriction, we're joined today by Dr. John Paulo Rivera. He's the research fellow at the Philippine Institute for Development Studies. Good afternoon, Dr. Rivera, and welcome to Business Brief.
Hi, good afternoon, Robert. Thank you for having me.
Now, Dr. Rivera, regulators cite investor protection as the reason for blocking access to Interactive Brokers and other global platforms following the NTC-SEC order, which is to remove unlicensed or unregistered virtual asset services or VASP platforms from the digital space. Now, from an economic and market perspective, do you think this measure is justified, and what are the risks and benefits for Filipino investors?
Well, this one can be justified if the platform is truly operating locally without the required licenses, because it will actually help enforce investor protection and the AML or CFT rules and reduce the exposure of fraud and mis-selling. However, the risk here is poor execution, like the sudden blocking without clear notice or transition arrangements, which can trap investors operationally, disrupt legitimate transactions, and create perceptions of arbitrary regulation.
Now, Doc, many local investors are saying the timing hurts, especially as the Philippine stock market has underperformed with a drop of more than 20% over the past decade. Now, how might this accessibility restriction affect investor confidence and capital market development in the Philippines?
You know what, Robert? I would understand the sentiment of our investors, but the abrupt access restrictions, especially without clear public guidance, can actually hurt confidence. It can reinforce policy uncertainty, perceptions, and discourage the participation in capital markets at the very moment, I would agree with you, at the very moment where Filipinos are actually seeking for diversification options beyond the Philippine Stock Exchange. But over time, no, it can slow capital market deepening if investors feel the rules that are changing too often without predictable due process. It will hurt. It will definitely hurt because it will affect this policy stability and certainty.
Now, could restricting this access inadvertently push investors to riskier, unregulated channels?
Well, as far as I can see, yes. Because when legitimate access is suddenly restricted, some users may migrate to other platforms, let's say VPN workarounds, informal middlemen, or truly unregulated platforms. There will be unexpected consequences. And this can increase consumer risk, weaken our AML or CFT monitoring, which is the opposite of the intended policy goal.
Now, based on your observation, how should policymakers now respond to local investors' reception to imposing these restrictions?
Well, I would also understand the objective of this policy. So I would recommend that enforcement be continued, but at the same time, the process would have to be fixed. In what way? So it can be done by publishing, like, for example, clear criteria for unlicensed or soliciting. They can also provide advance notice and a transition window, which would require platforms or brokers to communicate withdrawals, transfer options, strengthen investor education, so that protection doesn't look like gatekeeping.
Now, lastly, if restrictions on global brokers lead to increased use of local alternatives, what economic or innovation benchmark should we track, such as brokerage fee levels, market participation rates, or digital trading adoptions to see if the policy strengthens or weakens the Philippine capital market?
Well, Robert, in addition to what you have said, I would recommend that there is also a need to track market liquidity, turnover, even the quality of execution or uptime and digital onboarding. We can also try tracking product breadth like global access, ETFs, bonds. And most importantly, it is very critical to track fraud, complaint rates, even dispute resolution speed. Why? Because if costs fall, if costs will decrease, then we can expect that participation can rise, liquidity can improve, and the policy would be strengthened further. But if the opposite happens, then the policy would actually weaken the participation in such.
Okay, on that note, thank you for your time and insights, Dr. John Paulo Rivera, Research Fellow at the Philippine Institute for Development Studies.
Thank you very much, Robert.
Meanwhile, the economy is running against the clock. It needs 7% growth in the final quarter to meet this year's 5.5% GDP target. Former Bangko Sentral ng Pilipinas Deputy Governor Diwa Ginigundo tells BNC's Business 360 that third quarter growth of 4% reflects both policy slippages and global shocks hitting investment and consumer spending. He cautions that reaching the target will be tough, even with holiday spending and expected remittances from overseas Filipino workers.
First, the flood control scandal betrays a serious slippage in public policy. The budget process stressed on public works projects which have traditionally funded corruption and bad governance. Instead of shoring up the budget for public education and public health, as well as socially critical infrastructure, the government and Congress tolerated congressional insertions and enabled them through the so-called unprogrammed allocations. This opened the floodgates for corruption and dampened economic and business activities.
Ultra-Bilyonaryo Manny Villar's Meralco is bringing Cagbalete Island off Quezon closer to full electrification. This Christmas season, Meralco expands its microgram system project, bringing 24/7 power to more than 1,000 homes and businesses on the island of Mauban, Quezon. The Cagbalete microgrid, expected to be the country's largest once fully built, aims for 100% household electrification. It is also designed to offset up to 42,000 metric tons of carbon dioxide emissions, advancing the Philippines' renewable energy and sustainability goals. Families, students, and local offices also receive 100 Noche Buena packages, 300 school supply kits, 5 printers, and 12 laptops from Meralco's corporate social arm, OMF. Officials from the Department of Energy, Energy Regulatory Commission, the Quezon Provincial Government, and the local government of Mauban joined Meralco representatives during the switching on ceremony on December 18. Beyond bringing light to homes and businesses, the microgrid also underscores the economic potential of rural infrastructure, showing how investments in energy access can drive local business growth and support community welfare. Gotianun family-owned Filinvest Land is shutting down one of its subsidiaries, but key projects will stay on track. Life Malls Mimosa Incorporated currently has no assets, employees, or active operations. Chief Executive Officer Tristan Las Marias says the move lets the company focus on subsidiaries that are actively driving value and development. Filinvest stresses that ongoing projects, including the Filinvest Mimosa Plus Estate and Mimosa Lifestyle Mall, will not be affected. The closure is part of a broader plan to streamline operations and align the corporate structure with the company's growth priorities. A new twist is emerging in the controversy surrounding the ownership of the Ion Hotel, where former Public Works Undersecretary Cathy Cabral checked in before she fell off a ravine along Cannon Road. According to a Bilyonaryo.com report, businessman Ralph Robin Tan is listed as the owner of the Ion Hotel on paper. A babbler claims Tan is a known loyalist of alleged contractor and Benguet's lone congressional district representative Eric Yap. Interior Secretary John Vic Remulla insists that Cabral originally owns Ion Hotel before selling it to Yap. Ion Hotel's legal counsel calls the recent reports false and misleading. However, Remulla stands firm in his ground, emphasizing he has records to prove the ownership claims. Despite a slowdown in the auto industry, some makers are still steering ahead. Leading automobile manufacturer Honda is maintaining its position in the local market and is also accelerating its push into hybrid and electric vehicles. BNC Mobility correspondent G. Baroga has the story.
The auto industry may be seeing softer sales overall, but a few car brands are still managing to gain ground. One of them is Japanese legacy brand Honda, now under the leadership of Rie Miyake, the first female president of Honda Cars Philippines. Data from the Chamber of Automotive Manufacturers shows Honda holding steady at 7th place in the local market.
We look back at 2025 current situation also. The market itself is really competitive. However, we are so proud. We are one of the brand who grew faster than the market. So we are expecting further growth in the coming year as well.
As of November, Honda sold nearly 15,000 vehicles, up from just over 14,000 during the same period last year. That's about a 5% increase in sales. And Honda says much of that growth is being driven by its electrified lineup.
Our sales for the hybrid models also doubled compared with the previous year. And now there's a lot of option for the electric vehicles. However, to the past, we believe that considering the current market situation and also the infrastructure, hybrid vehicle is the best solution for the customers.
This year also brought a major change for Honda, the end of its partnership with the Bilyonaryo Zebel de Ayala family, which will continue running Honda dealerships only until December 31st. But Miyake-san says customers won't feel any disruption, with new groups already set to take over.
Together with existing dealership and the new principals, and also with new subsidiary to directly operate the dealership, we believe we are able to elevate our customer experience, and we are also able to even closer to the market.
Honda is celebrating 35 years in the Philippines, and they're marking the milestone by bringing their full model lineup to Honda Fest, sharing their stories, innovations, and a little more time with the people who have been part of the journey.
The highlight of the event is the preview of the Prelude, Honda's iconic sports coupe, now returning as a hybrid. Even with electrification, the model keeps its sporty character, staying true to Honda's fun-to-drive philosophy. The Prelude is set to officially launch next year, along with the expected arrival of Honda's battery electric models, including the Zero Series. For BNC Mobility, G. Baroga.
Ninoy Aquino International Airport is bracing for the holiday rush. 2.55 million passengers and nearly 14,000 flights are expected, making last year's traffic look modest in comparison. Terminal 3 is set for the biggest surge, handling the brunt of the holiday crowd. On December 20, NAIA already recorded a record day, over 171,000 passengers and 950 flights, highlighting just how packed the airport can get during peak season. We're taking another short break. Up next, a quick look at how Philippine shares closed today. That and more when Business Brief returns. Stay with us. Asian shares rise broadly, tracking tech-driven gains on Wall Street. All major Asian stocks are higher, with Japan's Nikkei 225 rising the most at nearly 2%. In currency markets, the US dollar weakens against the Japanese yen and Thai baht and remains flat against the Singapore and Hong Kong dollars. The greenback strengthens against the South Korean won, while the Australian dollar rises against the US dollar. In commodities, gold climbs nearly 0.8%, while oil prices are higher. In crypto, Bitcoin rises almost 0.8%, and Ethereum gains nearly 2%. A sea of green dominates the Philippine equity market in the first trading day of the week. The PSEI closes over 2% higher to 6041. All these sectoral indices are in the green, with services rising the most at more than 3%. Advancers outpace decliners 130 to 69, with value turnover at 8.3 billion pesos. Almost all of the day's most active stocks are in the green, with Apex Mining rising the most at nearly 5%. SM Investments remain flat. And on currencies, the peso is currently trading at 58.67 against the US dollar, up from the previous close of 58.70. Japan is moving to restart the world's largest nuclear plant, a controversial step in its post-Fukushima energy strategy. Tokyo Electric Power Company's Kashiwazaki Kariwa plant could boost Tokyo's electricity supply by 2%, but public skepticism is high, with residents and activists citing safety concerns and memories of the 2011 disaster. The government says the restart will strengthen energy security, cut costly fossil fuel imports, and double nuclear's share of electricity to 20% by 2040. Japan's nuclear restart won't directly power the Philippines, but it could ease fuel costs and stabilize energy prices across the region. That means lower bills for local businesses and a strong signal to investors that energy security is improving. While the world still thinks in dollars, investors are rushing into yuan debt. China's currency is making a slow but steady claim on global capital. Overseas yuan lending by Chinese banks has tripled in 4 years, now outpacing dollar loans. Lower borrowing costs and stable exchange rates are driving the surge. Countries like Indonesia, Kazakhstan, and Kenya are embracing yuan-denominated debt. Foreign investors are lured by higher returns and portfolio diversification. Analysts stress that Beijing's goal is not to overtake the dollar, but to create alternative capital channels and boost the yuan's global presence. At home, this trend could open new doors for yuan-based financing and signal China's rising influence in the region. And And that's a wrap for today's Business Brief. I'm Robert San. Join us again tomorrow for the stories that help you plan your next big, bold business moves. Only here on BNC, the Bilyonaryo News Channel.